Hi everyone, JR with Secure Metals with your technical look at both gold and silver. Today is October the 10th, 2013. It is 11:45 a.m. Eastern Standard Time. Just quick analysis. Government shutdown is still... So the government shutdown is on its 10th day. Memorials are getting shut down. Parks are getting shut down. If you ask me, I think it costs more money to shut those things down than it does to keep them open. So again, more political games for nothing, right? Anyway, let's get to the technicals. Not a lot to talk about. I think that the shutdown is old news. I don't think that's really gonna... I think everything that we're seeing on markets across the board, whether it be commodities or the equities or the forex, I think everything has priced in already this shutdown and a resolution as well. So I wanted to talk some technicals here, and so I'll go over the daily chart for both gold, silver. I'll do the Dow Jones again, and I'll also talk a little bit about the US dollar. So this is your daily gold chart here. Last time on the last video here, I did mention that we were seeing a little bit of a head and shoulders, where you see the shoulders here, the head, and of course another move to the upside back down. A move below this can be fairly dangerous, but I did spot another formation here. I know I talk a lot about formations and so on, but this formation here on top of the head and shoulders, this formation is called a wedge. Okay, and this is extremely bullish. Is actually one of the formations that I do like to play. Again, in this formation, you should find some support here between the 1265 all the way up to 1275 range. And I had mentioned before that a move below 1260, between 1260 and 1270, would probably bring down further losses, possibly big loss. Again, if this head and shoulders plays out. But if this wedge formation plays out, we can see a really big move to the upside. I'll show you an example of a wedge. For those of you who don't know what a wedge is, very bullish depending on where they are. Wedge formation. So this is a wedge. You can have them on an uptrend, and again, when you have prices coming together, where you have higher highs, higher lows, but again, it's almost squeezing the prices. You usually have a breakout to the opposite direction. So these wedges are really a formation that signal a reversal in trend. So again, this is the way a wedge would play out on an uptrend. And if we scroll down, obviously different types of formations. They're just showing you different examples. And of course, you have it on a downtrend. On a downtrend, this would be the way it would play out. So you have a wedge coming this way and so on. So this looks to be like what we're building here. And again, based on this wedge, we can assume that prices are going to go back at least to the 1378 area, to at least the 1370 area. Possibly even higher, possibly testing the 400, the mid 1400s. But again, I'm very excited about this wedge formation. Not really a lot of talk about gold here in the last couple of days. Gold, really, the price action has been fairly choppy, and really everything has really been playing like that again, I think because of this government shutdown. Let's look at silver. Well, let's finish up with gold here. I'll do the weekly chart. So on the daily chart, again, stochastics are kind of neutral. They did reverse a bit now, so it looks like they are coming down. So we might test this 1280 range as well as the 1270 range down here before going higher, or hopefully this will find some support right here before going up back to the high 1300s or mid 1400s. If we look at the weekly chart again, we've been trying to fold here for quite some time. Again, this is a weekly chart, so it can take some time. And currently under the 20-day moving average, we do want to get above this moving average. Let's look at silver now. Silver above the 20-day moving average. I actually like silver a little bit more than I like gold. On the daily chart right here, silver is, at least it looks like it's trying to play sideways here for a bit. So this is really what is. So this is where silver's been trading at, a very small range. We did have a move to the upside here to 1246 a few days ago, but again the move was shut down and came right back down to the 2190 range, 2175 range. Stochastics are still on the high side, so a little bit more room to go up, but they are beginning to change direction. And if we look at the 4-hour chart, I'll show you the 4-hour chart, because again, you can kind of see how tight this range has been. And we did have a test up here, which is fairly positive. This morning we had really bad economic data on unemployment claims. So yeah, unemployment claims expected was 300, and we actually had 374. Terrible, terrible. This has nothing to do with the shutdown. Remember, this is for the previous month. This is for the month of September, okay? So again, extremely bad news. On that news, we did see a spike up on the metals, but again, it was short-lived because they came right back down. Silver went to 22.20, found some resistance right here, and came right back down. Now it's back to 21.93. So we'll see if this level here, roughly around 2170, is going to hold. Stochastics on the 4-hour chart is starting to move back higher. On the weekly chart, again above the 20-day moving average. Again, I like that. That's fairly positive. And again, if this level does hold, the 2060, the 2130 range, if these levels hold, then I would expect a move back to the $25 range to test the 50-day moving average, and possibly even the 100-day moving average, as well as the 200-day moving average. So again, fairly neutral charts, a lot of choppy trading. Look at the Dow Jones. The Dow Jones is going bananas here, but again, fairly expected. Expected. You know, with all the political nonsense that's going on. And that's your weekly chart. Weekly chart pointing south, but I don't think it'll go south. I think that's just really just a move, because we've had such a big dip, such a drastic dip here between the 16th of September. Just really in the last 3 weeks, we've had a move from 15.7 to 14.7. So we've lost roughly 1,000 points. Currently, right back up to 15,000. Now, I also mentioned on my last video, I think when I did the video, the market was roughly around here, around 15.2. And again, I had these lines drawn. It looked like it found some support here, and this line coming back from the March 19th level. So found support here, support here, and again found support here again. Very nice bullish candle. The daily chart is going higher. So again, if we're able to close at these levels around the 15,000 level, I think a smaller move to the downside might occur. But again, this is an engulfing pattern, a bullish engulfing candle, which engulfs a few of the other candles prior. So if we're able to close between the 15,050 or the 15,100 range, I think that'll be fairly positive, and we can look to test back here the 15,300-400 zone. But again, we can clearly see that this is trading in a huge range, and if this level holds, the 1470, then we're most likely to test the 15,700 range sometime soon. But again, it depends on some of the political nonsense that's currently going on. I also wanted to visit back this formation. I told you guys about this, brought information on the British pound, United States dollar. On my last video, I gave a recommendation for any of those who follow the Forex market to sell at 162.20. It ended up going at 162.60, huge drop. And I actually took profits right here at 159.75, and it ended up going to 159.20. Currently back up to 159.74, so right where I actually took my profits. Again, this is just really a short-term trade, but if you want to look at a longer-term trade, I personally think that this broadening formation will play out, and this will most likely continue to go lower and lower and lower. If you have the patience for that, you might want to wait for that. But we'll keep an open eye on this broadening formation here on the daily chart for the British pound versus the U.S. dollar. Okay, let's look at the U.S. dollar now. Stochastics on the dollar rising. We did have some good price action this morning. We did hit a low of 79.60. The broadening formation did complete, in my view. Okay, this is your broadening formation here. So again, I like to point out these formations simply because I see the Dow Jones is in this formation right now, and I think I've probably shown about 5 examples, and all 5 examples managed to be bearish, and all of them came down here to the downside, except this one that we just recently discovered, but it hasn't played out just yet. But again, I like to show these formations because again, I want to make sure that people realize what they're up against when we look at this weekly chart, or actually again, not mostly on the weekly chart, more so than the monthly chart. Again, being the monthly chart is one of the slowest charts you can have, so again, it can take let's just say, for example, this move to the downside took a year and 4 months. Let's say if that's the case, then we're looking at, let's say, 2 or 3 years. 2 years, we can see this thing by the end of by the middle or the end of 2016, we can see the Dow Jones really at a big, I mean, this could be very destructive. So again, it can take some time to come about, but again, I point these formations out because we have to understand that these formations are real and people are trading them. And let me tell you, who in the world is buying here to take it over here? Again, I think it's fairly dangerous. Again, on a short term, I think you have a good shot, but you need to be very, very, very careful with this formation because, again, we've seen it play out a few times, including in the U.S. dollar. And I also wanted to point out on my silver chart, I pointed out that there was a gap in price a few weeks ago. And it actually hit the price target. This was the gap right here. It actually hit the target a few days ago, actually about a week ago. It hit 2058 was the low, or 2060. This was the price gap. And on the dollar, I don't know how I didn't see this last time, but there is a little bit of a gap. So we might see the dollar spike up to the $81, $82 range, fill this gap, and then continuing its descend here. Okay, aside from that, guys, thanks for joining me, and we'll see you next time. Bye bye.